Going on, guys? Welcome back to the channel and welcome back to another price prediction video, but this one is more important than most because we have the Fed meeting on Wednesday, and that is going to really dictate how we trade, especially for stocks like AMC and a lot of higher growth stocks that you guys are likely invested in as well. So we are not going to waste any time. We're going to get straight into this video. The only thing that I ask is that you hit that like button and subscribe to the channel and check out the links down below in the description to get yourself those free stocks if you guys have not already with Webull, Moomoo, and Public. And if you want to come join the trading community, link down below in the pinned comment. Not necessary, but it is necessary to go follow me on Twitter if you guys are active over there. Link is also in the pinned comment for that. So let's get into it. And first things first, let me know what you guys think. Do you think we are going to fall after the Fed meeting? Do you think we are going to rally after the Fed meeting? My personal stance on this, I've talked about this before. I think we are going to rally. Why is that? Because the markets are pricing in 5 rate hikes back to back. Like I've talked about many times, a lot of the inflation that we are seeing, especially in commodities, which is trickling into food products, right? In oil, which is trickling into gas. A lot of the CPI are those two. And then you have supply constraints as well, which all of those things are not demand problems. The Fed stated very clearly that they can only control the demand side. If there's a lot of demand or excess demand, the Fed raises rates, brings that demand down by making it harder to borrow money. If it's supply constraints, geopolitical tensions that is causing all this inflation, the Fed has no control over that. So it does no good by raising rates aggressively, which they have to raise rates. They have to show markets that they will get things under control. But if you start raising at 5 rate hikes back to back, you're going to put us into a recession. That's not going to be a soft landing. So it really comes down to, do you think Fed Jerome Powell on Wednesday is going to give us a reason to price in more than 5 back-to-back rate hikes from here? That's the simple question. Do you think that? I don't think Fed Jerome Powell is going to give us a reason to price in a 6th or 7th rate hike or a 0.5% rate hike in between now and September. The 5 meetings that we're going to get 0.25% rate hikes. I don't think he's going to give us a reason to price in a 0.5% rate hike. That's my personal opinion. And I've went over this more in depth than a lot of other videos, but due to the contagion that's really going to happen from Russia as well as China, it's not a good idea to hawk down on the economy at this current moment. And I think the Fed's going to take a very calculated approach. They are going to raise rates on March 16th on Wednesday, but that is already priced into the markets. You're not going to see the markets drop off of this one rate hike by itself. You need something more hawkish that is pretty much brand new information to see the market selling off. So let me know your thoughts on that down below in the comment section. Would love to hear why you guys think the market is going to sell off. But my opinion, most of this is already priced in, if not all of this. Literally 5 rate hikes, the next 5 meetings. 1, 2, 3, 4, 5 until September. A 0.25% rate hike is priced in every single meeting. November, that's where you see the first relaxation a little bit. Only 44.5% of investors expect there to be no rate hike by November. 38.2% expect another 0.25% rate hike by November. So, situation is looking very hawkish as far as what the markets are pricing in. But nonetheless, going off of my theory with what I said, what do I think is going to happen? Well, I think you're going to see the markets rally pretty hard after the Fed meeting, probably on Thursday, if not on Friday. The markets take a little while to digest that information, but if that happens, you do have a lot of contracts that are held in open interest for the call side and for the put side. About 3,000 calls that are in the money, 343,000 calls that are out of the money. For the put side, in the money puts at 112,000, for out of the money puts at 38,000. And we have went over this in a video already. But essentially, you have about 10 million shares that would have to be hedged for if AMC went to $20 per share. So that's a lot of buying power. That's a lot of buying power, considering our daily volume is really in the range of 25 to 29 million shares. That would make AMC absolutely rip. And I just think it's a simple question. This is all you have to ask yourself. Is Fed Jerome Powell, given the geopolitical tensions, given what is going on, going to give markets a reason to price in a 6th or 7th rate hike or a 0.5% rate hike? Because 5 rate hikes are firmly priced in back to back from market participants. That's the simple question. If the answer is yes, he's going to Paul Volcker us. He's going to give us a 0.5% rate hike between now and November, or he's going to give us more reason to price in additional rate hikes. Then your answer is probably short the market. Probably have a lot of exposure to the downside. If your answer is probably not, like he kind of gave us that insight during his Fed testimony, then I would kind of want to reduce my downside exposure heading into the Fed. But that is totally your opinion here. My opinion is I think it'll make AMC rally, like I just went over, especially with the options. If that happens, if we do see a bullish rally, a lot of these stocks that are beaten down into the dirt, that have either more debt, that are higher growing, like AMC has both of those, they're trying to recover. So right now they are a higher growing company and they do have more debt, but that goes for all those stocks. SoFi, Square, PayPal, Affirm, all of those would get a nice boost to the upside. Now, as far as the Ortex data, let's go ahead and look at this. So on Friday, we did see a lot of institutional option flows, 54 orders totaling $14.29 million, positive order value of 55%, and that was almost half of all last week's option activity that we've seen, but a lot of it was concentrated at that $15 put. A lot of orders you can see right here were for the $15 put expiring March 18th. So if we do see that bullish reaction, then you will see a lot of de-hedging for, especially around that $15 put price. There's about 20,000 open interest at the $15 put, and there's a lot of open interest at the $15 call as well. So I think even if we can break past that, we are going to see a lot of room to fly to the upside, but we'll get into that in just 1 second. The short interest of free float is sitting at 20.59%. The current shares that are sold short of 106.06 million, cost to borrow max of 2.32%, and the utilization is 100%. Days to cover is at 2.59. So it hasn't changed basically at all. Things have remained pretty much the same, and that's pretty interesting because you're not seeing the cost to borrow max going up on AMC, but you are seeing it going up on other stocks. Go figure, right? I don't believe these numbers on AMC at all. Good luck selling stock short for 2.32%. Don't think it's very likely, and don't really think it is happening. But besides that, we are getting some news, like a journalist was killed outside of Kyiv. We are seeing more of the whole chemical weapons talk. People think that Russia could use chemical weapons. If that happens, markets are gonna take a move to the downside. No other way about that. And that is the NATO chief that warns Russia may use chemical weapons against Ukrainians. Also, this ballistic missiles hit Iraq's Kurdish capital. Iran's Revolutionary Guard claim responsibility. 12 of them were fired. It says one civilian injured while the missiles caused other material damage. And it says Iran's Revolutionary Guards later took responsibility for the attack, which also targeted the U.S. consulate's new building. So there was a lot of talk about that. I mean, I don't know if we're going to do anything about it, if we're just going to be weak on Iran too. Hopefully not, but we'll just have to see how this does go for the markets. For oil, this could be good because, I mean, probably not going to do a deal with people that are sending ballistic missiles into another country, the Iran nuclear deal, and that's going to supply a lot more oil. So that actually could make the price of oil shoot up tomorrow, but we'll have to wait and see on that. A lot of, kind of negative geopolitical catalysts that have happened over the weekend. But Zelensky says he's still willing to meet with Putin, and that there was a lot of good things that came out of their talk. So a lot of back and forth, a lot of bearish things, but that definitely is a positive. We'll see how the markets take that, and how that plays into the Fed. The Fed is going to be the key for definitely this whole week. As far as the technical analysis is concerned, the RSI is approaching that oversold level. So it looks like based off of that, we should get somewhat of a bounce. We are under $15 per share. We are at $14.24 per share. That is lower than we have been in a while. We were lower than that right here when we seen a lot of fear in the markets January 28th. And I do expect to see another bounce back up to the upside. If not before Wednesday, definitely after Wednesday. If we even get a 40 or 50 million volume day, we're going to see a rally in the stock. Look back here, 12.4% move to the upside with 54.5 million shares that traded hands. We've just seen very low volume as well. And not really a big reason to flood into the stock, which, believe me, that is coming this week. The MACD is slightly on the bearish side. Can't really draw any conclusions here just because we're so close to being at our support level. I'm not going to sit here and say we're going to go down to $10 per share. If we do see a bearish reaction from the Fed, certainly we are going to drop more for AMC stock. But like I went over in the last video, the fundamental picture here supports the valuation that we are currently sitting at. A $7 billion market cap is definitely supported right here and right now. So my personal price target is we'll probably get a green day Monday, Tuesday, or even before the Fed meeting. And we'll probably get pushed back up to this $16 range. Right? And then I do think that Fed meeting, that bullish response, will likely push us above this 50-day moving average at 1862. We'll likely find a little bit of resistance, but I think we'll be able to push above that. And then I think we could really go as high as $21 per share. Unless the Fed comes out and just shocks us with something super bullish that we did not see coming, then we could go higher than that. But I think really the price target range is in between $18.50 and $21 per share. In that range is really what I expect just based off of the Fed. The max pain also is sitting at $20 by this Friday, and that is at the price where the most option holders lose the most amount of money. So that is where market makers like to pin a stock, and if the max pain is any reference, we will see a substantial move up. This is the largest spread between the price of the stock and the max pain that we have seen in a very long time, maybe ever, considering the price of AMC is almost $14 per share. The max pain is $20. I don't think we've seen a bigger spread than that. Hopefully that makes some sense. But all indications that I am looking at is that the Fed is going to be dovish. The markets are going to rally. You're probably going to see some shorts covering based off of the Fed kind of changing his stance to the dovish side. I don't know if that will cause the MOAS. I don't know if that will rip us to $30, $40, $50. I'm not going to come out here and claim that. I'm going to say in between $18.50 and $20 per share is really what I am personally expecting, even given the amount of options that we see currently on the option chain. So it does say as well, we are getting this announcement. The Russian the Russian negotiation team has stated to the RIA, which is Russian media, that there has been developments between Ukraine and Russia, so much that they expect a ceasefire to be signed in the next 2 to 3 days. Oh, that changes the game. That changes the game. Oh man, if that is true, the markets are going to go insane. They're going to rally. This has been causing more uncertainty than the Fed. And the markets, the only thing they hate more than bad news is uncertainty. Wow, that just came out 2 minutes ago. Go ahead and follow me over on Twitter to stay up to date with all of this from Unusual Whales, from other people I get news from. You guys will be caught up to date. Go ahead, follow me on Twitter, as well as come join the trading community as well if you guys have not already, and also get those free stocks, links down below in the description. Thank you guys for watching. Let me know your thoughts on all of this down below in the comment section. Nonetheless, you guys have a great day, and I will see you later on tonight on the live stream, but have a good day.